Hey everyone, Terry here. Welcome back to Choose Me. Previously, we had dived into our participants' 3 buckets by evaluating and reviewing their entire portfolio and splitting them into protection, defense, and attack. Our participants have gained greater clarity on how to better allocate and manage their wealth. This week, our participants have returned prepared with their homework. From the previous week, they need to research and present about a company they are invested in. Now, we're all ready, so let's get right into... Hold up. What's going on? Let's cue the opening titles. That explains. It appears that with the recent restrictions in place, our coaching sessions will now have to be conducted online. However, it also seems that there's another big change since we last met our participants.
So, welcome. Now it's me, not Eric. So just to update you maybe because of some medical condition, right, Eric will be out from work for quite a bit. So I'm taking over you and Jonathan.
I'm a bit concerned as well. I hope everything, he's okay.
He'll be okay I think he'll be okay. Yeah, but for the rest of the journey, it will be me.
Okay. You will have to coach 4 of us.
Yeah.
Can I? It's just you always like challenges, right? So you say you always like challenges, right? So this is just another.
This is an unexpected challenges. I'll tell you that for you and Georgiana, like these 2 meetings a bit more of like for me to backtrack . So let me just confirm with you a few things. Firstly, right, the first session you did with Eric, there's this thing called the portfolio review. And then how much do you know about the company? I believe he went through that as well. I think the few sessions after that, he went through with you the importance of saving money and putting into the portfolio other than just growing the money, and then you all set some goals, right?
Yeah.
To recap again, you had 35k including options, 36k cash on site. So total portfolio you have 71,000. So your portfolio currently, right, is 52,000 in Sing dollar terms. As compared to previously, your portfolio was 36,000.
Yes.
So that is a 16k increase from the 16k increase Wow, fresh start Happy
Yeah.
I feel happy for you.
Yeah.
Yay!
Yeah, so glad because I just need to make sure I use my cash more efficiently. I think that's something that we talked about, right? Like when we discussed.
Yeah, I feel very happy for you, really. Because we only have this is the 4th session, and your portfolio already went 180 degrees change already in terms of the size and your target
So this is Apple. So this is the business model they have. They have wearables, then the service, they have all these series.
Right.
And the Mac, and then the iPad, iPhone, yeah. So what coming next is their M1 chip. They are marketing very hard. So I compare their performance. This is the power, this is the performance. So they claim that they can use low power to overrun the other chip performance. Okay, I come to business model. So I compare. So you see iPhone 41% in last year, July. The revenue dropped a bit.
Okay.
But the time it announced the M1 chip, it shot up 59%. So this one, I was thinking, the M1 marketing is really very good already. So this is after they announced, and then this is for now. So you see wearable service, then I break them down into different segments and then compare their sales. So I can see that, although wearable is only 9%, but keep growing. And then this is the year-to-year revenue change. Service is like the warranty card. It grow, I believe, because of the devices. Because the more devices you get, the more services you're going to subscribe.
Right. This is the part that I think, right, if you're researching about Apple, you should study this. Service revenue is their up and coming.
So I go and compare. Is their phone very expensive? Yes, iPhone is very expensive.
Right.
Much more expensive, but it's like $100-200 expensive, and people call it expensive. Because these are the top end. I compare top end.
Right.
So I don't find it expensive because it's more durable. So the growth driver, I also see that they have a lot of patent. Although they patent quite some time ago, but they realize their patent. They make it come true. So I see that they have trying to innovate a lot of things. So in terms of risks, there are more risks, like the regulatory risk, for example, the export policy. And then the monopoly challenge. As a mega big company, they sure hit all these problems. So risks, yes, they have, but I see that they should be able to survive. So in terms of management, this is Tim Cook who took over in 2011 by Steve Jobs. The thing that I want to go through is this is the whole panel list of the director, the CEO, and president. They don't get salary. They get share. So Tim Cook, he also don't want his remuneration to go down. So I believe that he will keep pumping the share price up and up for his sake also. And then of the rest of the shareholder also. Then in terms of the risk rating, actually all this I just see all green. Then the rate, the payable, I think because they pay their supplier a bit late. Even they declare, say, I'm going to pay 100 days late. The supplier also say, okay, never mind, because the volume is so big. So I don't see it's a risk. So startup, I see that they are healthy in its core.
Actually, overall, this company you did a very good case study in terms of like the analysis of revenue by segment. I prefer this type of presentation in terms of your own research, right? You know each segment, what is it growing or whether is it growing or not. And then one thing is actually you have a very long-term view for this company.
Yes.
Something that I question about is like in terms of your portfolio, it didn't reflect as much as a holding compared to like other companies.
Yeah.
So that's only the part that I question about.
So this is Tattoo Chef. It's a relatively new company that's listed last year, October. So they have very little employees and the market cap is relatively small to their other competitors. So what they do is actually they are selling plant-based food. So for vegans or for vegetarians, and then they are targeting the frozen food sections, and they are currently in US only, as in they're serving US customers only. They actually have two main contributed segments, which is the private labels and their own branded label. So private label means that they actually sell their products to other brands. Like for example, I'm a manufacturer, then I sell my products to NTUC, then NTUC brand it as their own. So that's how private label works. You just sell the product, then they rebrand it as their own. I think they realized that this is not the way to go, because if you don't have your own brand, it's very hard for people to recognize and also for you to increase your margins, all this. So that's why over last year and this year, they actually increased their own branding. Their own brand. Then in terms of peer analysis, these are the other two brands I found. You can see that even like big brands, all this, right, the market share is also not very high in terms of the plant-based.
So there's no one prominent person that is dominating. Then the size of market is still able for them to grow very quickly.
They don't have moat because everything is controlled by their buyers. But through current growth and their objectives, right, they're trying to increase their brand awareness and hoping on to the trends of food sustainability and all this stuff to hopefully help them build a bigger moat. Then the next one, let's talk about the growth driver. So the first one is on the tailwind side, which is the trends of plant-based food. This is one of the biggest growth drivers that's pushing for their sales. They also want to increase the points of distribution. So currently, right, they only have around 4.2k of stores around, and they want to increase to 10k. The points of distribution from 23k to around 65k. So all this, right, is to help to reduce 2021. Yeah, so this is this year's current.
1 year.
Yeah, so it's quite strong. Okay, then the next one is actually to sell to customers straight away instead of going through all these club stores. So nowadays, through e-commerce, they can go from B to C now. And they can see that their email lists have grown by 250%. This actually, for marketers, is actually a good thing because from the list, right, you can actually tell who are your intended buyers and then who are interested in your product. So having a bigger list is a good gauge of how your company is actually wanted by the consumers itself. And then the next one, the driver, is to expand more products. So last year, they have around 38 products out there. And then this year, they are planning to launch a total of 62. And then they also have a lot of ideas inside the R&D team there that they are already waiting to develop. So the risk is regulation, like we mentioned, all the food safety, all this stuff, like in terms of poisoning or whether if you eat too much, it will increase your sodium content, all these health risks. So these are one thing that they have to take note of. And then another risk is R&D, constant need for R&D. As well as the last one is the concentration risk, like we mentioned earlier. So these are the 4 key personnel. Previously, they have a fifth one, but the CFO recently just quit all of a sudden, so nobody knew why he quit also. I'm still looking into why this guy left because usually when CFO left, it's a big thing, right?
Yes.
Okay, so these are some highlighted points which I highlighted at the sides. But I'm not sure how am I supposed to analyze further. Like for the earnings management risk, right? Even though we know that there are receivables and payables, all this stuff, right? How should we actually further analyze this?
You need to see, like, for example, whether these receivable and payables, right, fluctuate by a very huge percentage compared to the previous year.
Because they are newly IPO, then they don't have a lot of data points for us to check. So we should just monitor this along the way.
Yeah, correct. Because you're not supposed to look at previous years.
Okay.
This is manual reads.
Yeah, this is manual reads. But then I'm trying to put, the information in here and there. So it's still looking messy. Yeah, as you can see here, right? Because it is a REIT listed in Singapore, but their property is in US. So it's not exactly like the usual REITs, I understand. And so far that as much as I know, the management people, they are all based in Singapore, but then they have to oversee their properties and to manage them in US. Although that the sponsors is manual REIT insurance is in US as well, but then the execution of all this strategic planning and all that is still in Singapore. So these are more the things that I will need time to find out more.
Understand? Because I think I share with my students is, right, you follow this thing called the Pareto efficient. So 80% of the information, you should be able to garner it in about 20% of your time allocated. Means 80-20, work 80-20. So what I mean by this, do you agree with me, this entire company or any company you research, there's always this part about the company very hard for you to research, or like you require some sort of insider information. Those are the 20% will require 80% of your time or resources. And you don't want to waste on your time on that.
Yeah.
That is why whenever you get as much information as you can in the shortest period of time, right? You decided the company good, everything in the 80% information, then after that valuation. That's why you invest with a margin of safety to protect yourself from all this uncertainty. More or less, I think you are heading the right direction. Just follow 80-20. If you really find that very hard to find, you just list down that, okay, you have questions for this company in this aspect. And then it can be raised as a sort of a yellow flag or red flag for yourself.
So, okay, this information about company, mostly I took it out from the annual reports and the investor presentation. These ones come from the most recent investor presentations. This one, I got it from the recent earnings calls. Sales growth trends, I'm still pending. So this one, I need to fill that in. These are some of the other customer growth numbers that we see from the earnings call. Market share industry, this is still pending competitor. I did have some ratings, Cloudflare versus Fastly, but not enough yet. These are what they are, where are their main growth engines. Business risk, pending.
Okay, continue.
Actually, have but I haven't put this in. Valuations, here is what VApp says, and then I will probably be using most likely price to sales. These are my thoughts after I run through. I think I still need to confirm the cash flow terms. I think when I look through the terms, I still need further in-depth study into that. And I know that they are still going for growth over profitability, but I don't really like it that they keep on spending a huge jump in sales and marketing, but then it doesn't really quite translate the same percentage to their revenue growth. So that's for Cloudflare.
So yeah, I would say, okay, if I were to be brutally honest, right, yours is the worst. Okay. I mean, not worse as in terms of the presentation wise, because I think you just cut and paste, and I will do that myself also.
Yeah.
I will do that myself, and honestly. So it's very efficient in terms of time. Other than the case study aside, your portfolio wise, actually, in fact, I am the most happy one. In terms of the allocation, the clearing up is the best.
Yeah.
In execution wise, yours and Jia Xuan one is very good, I feel. In terms of the next session, right, I intend to do all together. The point of next meeting is actually because the first time I'm doing a 4-people group. So it's nice that you guys meet your new classmates. And it's more of like sharing of what you all have discovered or learned along the way for the past 2 months actually. Then you can learn from everyone else, how is their finding, how do they look at company. Because in fact, I went through Jonathan and Jia Xuan, both have different way of looking at it, and you have different way of looking at it. Then you all can learn from each other. Right?
Okay.
And yeah, I think that will be the session. How do you feel? Any stress?
Yeah, I'm very stressed because now then, I'm lagging behind already. So then there's some work to be done now to catch up.
Yeah, it's okay, right? At least you already got some. You force yourself to study the company in your portfolio, and that should be the way.
Thank you for your feedback. 我会加油。
Yeah, so thank you for your time.
谢谢师傅。
Thank you.
Thank you.
Stay safe, ah.
You too, you too. Bye bye.
Bye.
And we are back. Our participants have just completed their first mini case study sharing with Ming Yao, and I must say that they've all done pretty well. However, they all need to prepare for the upcoming session because next, our participants will finally get to meet one another, and they'll each present a case study of a company they are invested in. Now this, you do not want to miss. If you want to know more and join our investing community, do sign up for the upcoming V Summit. Link is in the description below.